Alright guys, good afternoon guys. I just want to do a little rundown on how I took this particular trade on Gbpusd. So let me take you guys to the chart. So first of all, looking at this chart, there are 5 things that I used to do my analysis on this particular trade. So first of all, I marked out this order block here, and secondly I saw this FVG, this fair value gap here. So an FVG is a gap between a three candle movement. So this is the first candle, the second candle, and the third candle. So this is the gap in between them where you see you have this closure. This is where this candle opened, and this is where this one also. This is where this one like closed, and this is the gap. See this 2 week here. So it's like the gap. That's the FVG. This gap here. So when I saw this, I also used this on my feed level so that I will know whether I'm in either the premium or the discount zone. So at first I used this feed level here, and when I first saw the trade, I had to wait for it to come below the 50%, which is equilibrium, before I could take my trades. So after then, I went down to the lower time frame. Guys. So I went down to 1 hour, I noticed that we have an imbalance here, guys. We have this FVG here. So you can see this FVG. So see how visible it is here. So it's quite smaller here on the 1 hour. So I just know that this point was a zone where I want to take my trade. This FVG and this other block here. You can see it clearly on the 2 hours. See it here. On the 2 hours, this is what it looks like. See the FVG and your OB here. So I knew that price was going to come around there to fill. So this is the other block here, the last sell candle before the buy candle, and this is the space here. So that's it. So let me take you back to how I got my entry on the 1 minute. So on the 1 minute time frame, this was what I did. I waited for price to first took out liquidity here. Price took out liquidity here, then created a shifting structure. Here. We have a break of structure here to the upside. That's causing a change of character to the upside. So when I saw that, I just took my entry here in price was about breaking, so I took my first entry here. So, and you can see now we are still moving upwards. So price is actually reacting to this zone. Yeah, so price is actually reacting to this zone now. So this is New York session. So this is what we have here. We have a break of structure, like a shift to the downside again. Market pull down. This could be very, very confusing, but it's good as a trader to identify all this in the chart. So now we know that we are bearish on the smallest time frame. So before I can break even in this trade, if I have price run out above here, this last high, now I'm just waiting for price to run above here so that I can have a break of structure to the upside. But instead of that, this is what I'm saying. I'm saying price break structure downwards, and this is a BOS. This is another break of structure downwards, and if I don't see price push above here, that means we might be going bearish on the smallest time frame, which I might want to close this trade. Now look at what we have here on the 1 minute time frame. We have another block here. This is another block. This particular place is another block. So this particular place is a fair value gap and FVG. So if with time I see price react to this zone or consolidate around this zone, then I'll be forced to close my trades right away. Then wait for price to continue selling, because price might want to fill up this imbalance here in the 1 minute time frame and start selling downwards. So that's what I'm also saying. But if price doesn't fill up, like if price run above here with an impulsive move here, price run above here with an impulsive move here, then we are going to continue bullish. So if I was to break even now, since here we have a break of structure here, this was where we have our market shift. I'm using the 1 minute time frame, don't be confused. So this was where we have our market shift here. So let's say I introduce the fib level here. Okay, I introduce the fib level. So if anything wants to go wrong, price is not supposed to break this other block in the discount level here. So this is how you can set your break even, like you can lock your trade using all these whole simple market structure ideas. So we know that this is an order block here, the last sell candle for his buy candle. So if price should break below this order block, then this trade is going to be continuing the bear move. But if price doesn't break below this order block, then we are going to have a break of structure, yeah, then continue buying. So I want to see price fill up this imbalance and break this particular order block with an impulsive move, causing a break of structure here, guys. Causing a break of structure here, so we can continue bullish. But if that doesn't happen, then I just know that if price break this order block below this discount level from these two range here, that means we'll be going bearish. So let me just lock my entry here, this particular trade here. So price is not expected to come to that. We are not expecting price to come to this place here to take out this other block. So anything we are doing, we just want price to do everything is doing around this point. So I'll come back to this trade maybe in the next 2 hours. Let's see if we'll be able to achieve our first TP here. This is our first TP. These Asian highs where we have a lot of liquidity. Let me bring it to 15 minutes here. So we have liquidity around here, this high. So that's where our first TP is. So let's just see what comes out from the trade, guys. Okay, back on the trade. So guys, after some hours I came back to the chart, you know, to check on the trade. So after some minutes I I took a second entry because here on the 5 minutes, my first entry, let me start up my history. Okay, this is the trade history. So I had my first entry to be around there where I took earlier on in the day. My first entry was here. So my first entry was here and the second one was, I think, here. Second one was here. So let me quickly explain what happened here. So during the process of trading, I came down to this point here. Let me go back to 1 minute. I came back to this other block here. I came back to this point here, which was the market was still ranging around here if you watch the video before we had this BOS. So I wasn't expecting the market to take out this other block. So let me take it out so you can see very well. I wasn't expecting market to Sorry guys, let me just take out this thing so I can explain the trade orders, trade history. Okay, so this is it here on the 5 minutes. I was actually watching it on the 5 minutes, so you can see this other block here. So when we were I was watching this trade, I was expecting price to take out this OB, like sweep the liquidity. So I brought my break even down here, like I locked my profit below this point, and price took me out. So when price took me out in the process of entering another trade here, I took a multiple trade. So I took a multiple trade, and this was what happened. Price gave a BOS to the upside, and we are still moving. So this was how I did the analysis, right from from daily time frame. Like I said, using this OB here, daily time frame, I knew that price was going to react to this OB here, then go upwards to take out liquidity here where I have TP, or just take out liquidity, just any of those places, and wait for price to take out liquidity above this Asian high of the day. But I'll just close right at this point here, so I can close half of the trades, like few positions here, then take profit above here, guys. So that was how I got a good setup using my top down analysis. So just do well to watch the whole video. Thank you for watching, and please subscribe.